Welcome to the ThetaWaveTrader. It's September 10th, 2024. I hope you had an awesome day yesterday. Let's have a look at the markets this morning. Let's start with the daily. Just do a quick review on where we're at on the daily. Excuse me. Getting dark in the morning here in Canada now. You wake up and it's dark, and it gets dark earlier. Right until you get to December, then you get those really short days where it's dark when you get up, and then by like 4 in the afternoon, 5 in the afternoon, it's dark again. I do love the heat. Okay, so we're back into this daily fair value gap. Back on the August 13th. We've come back up, hit the edge of that, into this weekly volume imbalance. Not volume imbalance, this weekly fair value gap, which is now an inversion. We've gone through it. Coming back into it again. We are in another little fair value gap daily from yesterday's high to Thursday's low. There's a small little fair value gap in here. So if we come back and rebalance that, I like to see it stay open and get back into the consequent encroachment of the fair value gap inversion here for the weekly. I like to see it as high as that, and then just kind of peel off and roll back down. If we do come back up, I wouldn't want to see 50% of that wick, the bottom of the wick, or fill. Bringing us back into this fair value gaps consequent encroachment aligns us with this wick here and gives us about 25% of this wick. So we don't have there are several different objectives here. One, the midpoint of this between here and here, this daily fair value gap. Look at the consequent encroachment of that. The close, the consequent encroachment of this daily fair value gap. And then if we lose 50% of the wick, look for a fill of that. Another return to the high of this inversion weekly and the inversion daily. So I got 3, 4 different upside. I'll be looking forward to see if there's a reversal this morning to get back down into this volume imbalance down here, or this price imbalance, and then continue going lower. So right now I have nothing for lower. We're still going higher, and I've got some short-term ranges I'm looking for on the daily. So with that in mind, we came down yesterday into the regular trading hours, into the consequent encroachment, just dipped below that into previous days new day opening gap high and the daily price imbalance, and then we pulled away from that, came back into this fair value gap after taking that high, consequent encroachment, sorry, the mean threshold of this candle, held price, and we've gone higher. So looking at those consequent encroachments of the weekly and daily fair value gaps, it aligns us with this last up close candle, which is the most sensitive of the two that make up the breaker that takes out this low. It's mean threshold is roughly the same place as this consequent encroachment on the daily. So that will be a level for me to watch for on the hourly. And strangely enough, the weekly inversion fair value gap also lines up with the open of this candle here. So those are two key areas I'll be looking for a reversal. Overall, we'd have to get down below here on the hourly to break below this low, break in structure, and then use this to go lower. This would be a breaker as well. We have a swing high here, we have a low, a high, a low. So these two candles taking out this high would be our breaker. So we want to see it come back to this breaker and start eating through it. Right away, we've got relative equal lows here. We're going to get through this candle's mean threshold. This wick would be the indicator for lower prices, I think, running for these lows on the hourly. So I've got my upside objective I've been looking for today. Lock that in place so I don't move it around. Let's look at our regular trading hours. I wanted to show you this where we left off yesterday. We were aiming for that upside objective yesterday, which is right here in this box. I just extended it throughout the day to see how we acted off of it. And we traded right up through it, came back, found support on it, then finally dipped through it, came back inside it perfectly. One more time, came back, found support at that. So you draw your fib tool. If you're using that to go short off an old inversion fair value gap, there's 50% here, 62%, and watch where it ends. Precision on 70%, optimum trade entry reversal back up into the inversion. The downside of inversion was sitting here. We never reached it. We just had the optimum trade entry. There's a reversal. We trade back into the reversal, and this order blocks mean threshold. Found support, looking for this high to get taken. And it does, and then we proceed to run back up into the inversion from earlier that day. So I do like these premium discount inversion method. I do. All right. So now we're just waiting on think about that is my upside area of interest, and we'll see if we get through that to go higher. We still have this upside of this hourly fair value gap that hasn't been filled yet. Back on my channel. So good morning to some people. We got 12 people on board. Good morning, good morning. And Bitcoin, what's that up to? Let's go back to the daily. And I made a whole series of notes in this day here, so I'm going to remove all those. So we have this low taken. We are above 50% of this wick. We have a reversal. So look for it to get above this candle here. Find some support to get back up into that level here. I like to see it retrace back into there before it takes out that candle. We can get back into here and then push higher. Great. Again, look for that. If we take out this low here, we're looking for this low and then 50% of that wick again. And we have taken out these lows already. We'd be looking to go lower. This is all relative equal highs above us. There's a little candy land up there. So that's the daily. Here I'm looking for. Soybeans came right down to our level. We retraced back off of that yesterday, and now we're pulling back into that range again. That upside mean threshold, this candle here is the most sensitive, so its mean threshold, so far we got both of those added together. Their mean threshold would be right 50%. Bodies are way below that. You just trace it back to this old low here. Trying to find a level that which it keyed off of an old low. So this would be the next in play. I often wonder if you cut through candles, you could almost predict which the next PD array it's going to draw to as it goes further out and continue to cut back, that it's looking for the next set of PD arrays. So that you look for this immediate one behind you. But anyway, just an idea. Wheat, we're looking for wheat to retrace back into Cam 1 model. We talked about this yesterday, so we're back in here now. It's all the way down to the top of this level here. I'd like to see it come into. So right now we're right in the zone from here to here. So we expect that to go long now from here. Come back down here. I wouldn't want to see it start dipping in. I want to see all this stay open now. See that continue lifting up higher. So that's come back to where we expected it to. It's good. That did take out those lows. Bring my eye to here. We'll see if this now becomes that. It'll become an inversion once that candle closes through it today, if it does. And then we want to see them find support off that and push higher again. We've got equal lows here in this gap below us. So I don't think the consolidation. Got a cam model already from back there. We're just in a small consolidation here in sugar. You got to break out above that and then look for drawing people into a long, then taking them out, coming back to this gap, this volume imbalance down here. Or liquidity void. There's no volume imbalance. There's no liquidity delivered there, so it's a liquidity void. So we've got it. We hit right off that level coffee, which is excellent. On Friday, we hit just exactly where we were looking. And now we've retraced back up into the premium rate. Now I want to see this start eating through here. So far it's acted exactly the way we wanted it to. We've called both directions on coffee. And we're cattle. I want to see cattle start to degrade again today now and start digging down below these lows. But relative equal lows here. I want to see us retrace into this and start coming back down. So look for a reversal on cattle today. If we just continue to drive right through the top of the fair value gap above us, look for this relative equal highs here to get taken out and use that as support to go higher and aim for these highs. So far we are back inside this liquidity void here. This gap. We've traced back up into the consequent encroachment of this fair value gap. We just came back, we've reclaimed it multiple times. Hit the consequent encroachment, started peeling away. So I've got nothing up here other than this breaker here. We took out these highs, but these two last low down closed candles here ran up above them and then quickly gapped down. That really took people offside. So if you thought you were going to go higher here, it slammed back against you. You work your way back up into this gap and this breaker, and we're looking for this to go lower now. This is the key level right here. If we trade above this level, those two order blocks there, if we trade above them and go higher, I'm looking for another return back into the breaker above us. Lumber is so far acting exactly the way we said. We have a trade below. We came back up inside the breaker and now we're pulling away. Downside objective is here. That's working exactly as we called it. And lean piggies, I got nothing for lean piggies just yet. Not till we get below 25% of that. And this candle here. Gold. We had a nice little retracement back into this level here. This was the inversion. We were calling this last week. Took out this high, use this high as support now. Once you get a body above it, we come back inside this fair value gap in that order block. You trade above it again, come back, find, now you want to see it hold price. It does, mean threshold. Now you're looking for this candle's mean threshold. And we're through 50% of that wick. This is where we were looking for. And now we're through that. That was our upside objective. That's concluded. So I'll be looking for right there, just shy of it here. So we have these weekly new week opening gaps right above you. There's the big magnet, the draw liquidity. So I'd like to see that start digging into these. Keep your eye on the consequent encroachment. Sorry, the mean threshold. We do live to describe the middle of things in 3 different ways: equilibrium, consequent encroachment, mean threshold. And I understand he's got reasons for each. I'm not the best person for giving you the perfect verbatim of Michael's stuff. I do understand his this particular model that I preach every morning. I do love it, and I may not get the words right all the time. I constantly keep correcting myself, which I know could be super annoying and throw people off, so I apologize for that. But stick with me. There's a foundation, a basis to what we're doing. We're just trying to stay in price action is all we're doing. I have a model specifically that I look for. We got 8 more minutes. Let's quickly go into oil. Morning, Hadi, Hans, Craig, good morning. Curryfish, hello. Gorky, welcome. You must be new. Mohammed, good morning. Gorky retracted some statement. And Derek, good morning. Dat Wolf, good morning. I've been studying ICT this week. Thank you for inspiring me. You're very, very welcome. How are you finding his stuff? I hope you're learning lots. There's so much there to learn, and it's exciting because as a charter member, I look back on all the stuff that he taught us, and there's so much new stuff. You guys are getting absolutely the cream of the crop here because he's teaching his son, and you guys have the benefit of riding the wave. You're surfing information there that we never even had access to, and I've been with him since 2016. So, and I've seen everything he's made, and it's he's constantly surprising me with all the information he gives out. So congratulations to you, Dat Wolf. I hope it continues to move you forward in a positive way. And then study. He's not in today, so here's your opportunity to get into the markets and study what it is he's been teaching you. Bro, we love you and your explanations. They are perfect for us imperfect people. Aw, I love you, Derek. Thanks, buddy. I appreciate that. I do my best. I'm not trying to throw people off. I'm just trying to give you the best I can. And it just shows you that even I'm getting close to 60 now, so not that that's an excuse. So I may stumble over words and stuff, but I do understand pattern recognition. That's part of my ADHD. It works quite well on pattern recognition. That's why I could always tell whether or not you're having a heart attack by your ECG strips. I used to love that. It used to take me like seconds, and I could look at your strip and tell you where you're having your heart attack, blah, blah, blah. So I do like pattern recognition. So this is there's some simple repeating patterns here, like Michael says. All right, so aiming for these old highs here. This surgical thing, I don't know why we're still on this, Derek, but I don't even know who it was that mentioned this. If you're still here, whoever it was, and you're talking about intuitive surgical, it's a stock. I was just trying to make a point about the algorithm functions in all time frames, in all asset classes, stocks, bonds, you name it. It's if it's on a chart that produces candles and it's traded out in public, it's a algorithm running the stock, running everything. It's not volume. I know that's hard for people to believe, but I've shown multiple times here that I didn't know anything that's going on inside that company, its fundamentals or anything, and we've been able to call for reversals and everything going on. So we have no idea what's going in the boardroom, but we do know how the algorithm is working this. So the next equilibrium array inside the range that we're in right now is this fella right here. So if we start working our way through this, look for the next upside array. If not, if we pop inside this, get a reaction off of that and start coming back down, look for this fair value gap below us and see how the areas of sensitivity are the high, the consequent encroachment. Not that you guys are really watching this, but I like to put it up every morning just to kind of say, hey, look, if we were tracking a stock in particular, I should put one of mine up there instead of tracking something I don't know. Keep my eye on it. And back to NQ again. Let's have a look at, oh yeah, so we got soybeans. What else we got here? Gold. Isn't there something else in here? Oh yes. See how we came back up into that area we're looking for? It hit the consequent encroachment. And that downside one, I didn't want it to see it come back to. Well, look where it's headed. We'll see if it hits the box. Natural gas. We're coming back to the box here. See how we ran up through it, came back down, tagged it. Let me lock that in place there and see if it stops. Good. See how it ran above it, tap, tap, tap. Finally ran up, took out the highs right there. Now, ideally, I'd want to see it stay inside this candle right here. This last up close candle right here before this one. We have a swing. So this is the guy I want to see come back inside it, which is the consequent mean threshold. And it is holding right now. We have a little dip back down into this level, which is fine. And now I want to see that really start gunning for these highs in natural gas. If it doesn't, if it just taps that top, I think there's a small imbalance in there. I don't have the charts blown right up big here, but we have huge pool of liquidity sitting above us here. We just cleaned it out right there. Just took it out. So if you're looking for this to retrace back into a discount array, we'd have to get below here and dig down into that liquidity void here, this gap. And with the way the oil's been working lately, oh yeah, we were talking about oil, weren't we? So here's we have these lows that are taken out, 8 o'clock, reversal. And see how the candle goes right through. You don't get an opportunity to go through it and back to it. If this candle continues to run through the next one, and we trade above it, which we do right there, and then we want to see it return back into this candle here, or old high. So anywhere inside that rejection block, right there is what you want to see it retrace back into, and it comes all the way back inside it right here. Bodies of the candles respect it. The wick dips into the low, into this order block, and then we continue to run higher, taking out relative equal highs, relative equal highs. We pull back into the range. That's a ultimate trade entry reversal right here. We pull back up all the way inside this small range here, all the way back into the order blocks, mean threshold, holding price, and this old weekly fair value gap. Tap, 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 continue running higher. So it was a nice little reversal off of here this morning at 8:30 this morning, if you had caught that. Okay, here we go. Oh, that's mine. It's not up yet. All right. Corky, yeah, found you yesterday. Blessed watching an ICT veteran. Well, you're welcome to stick around, Corky. 598, still a young guy. 59.8 is a young guy. Yes, it is. I might add, Craig. It's very young. Christoph, hello. How are you doing? Yes, I'm here. Always here. Exoff. I like to hear that. Oh, Christoph, isn't the ISRG? Is that your stock you want me to look at? So I'm here. Abs, just touching base with you. I agree with you, Derek. D is the man. I love you guys. Christoph, 2 algos decide everything, and Derek knows. And Derek knows. 2 algos decide everything, and Derek knows. Derek does know. Russell, good morning. Do you get Mentor of the Year award? Not quite. You got the man himself, the boss. He gets mentor. Tanya, great mentor. Hydra, another good guy. They're really good. Those are other people you should check out. They've got a specific setup that works for them. Mine is obviously fair value gaps and inversions and reversals. That's my thing. Those are the things I enjoy the most. Right here is the reversal. Come back up, tap it. We're looking for lower prices. I want to see this get taken out now. One big bold candle, get right through both of those. Come back, find support in here, keep going lower. That's oil. So Greg, keep an eye on that one. You've got that little reversal happening right there already. We've come back up and just tapped it perfectly there for a short. You've taken out old highs here. So I want to see that continue coming down now. And let's get back over here. Oh my goodness, look at that. We gap right through it. So here's the regular trading hours gap. The close of that to the open of that. Welcome to your regular trading hour gap this morning. 50% is right here. Our first fair value gap of the morning. Let's see how well we kind of reaction we get off that. Remember, we're looking for upside objectives this morning. Let me go back to electronic trading hours here. That's our gap this morning. So if we trade through this and back into it, this guy order block, then I'm looking for 50% of that regular trading hour gap. Consequent encroachment. Come back, find support at it. Abs, can you see this? Can you see how that's being used now? Using it all with his other principles. Seven seconds, we'll watch, see how that closes. Literally right on it. You gotta watch out for a bull trap here. So I want to see that trade right back up into here. Freeze on that. Can come there, here, freeze and start coming back down. I want to see it start traveling through here. Watch this breaker here. Beautiful. So far, beautiful. Come back and tap the top. Lovely. Look at that. Took out the lows. Pay yourself. Pay yourself. Not that you're taking a trade there, of course, but we're just watching. Looking for that infamous reversal. See, infamous reversal. Okay, here we go, folks. Coming up for our consequent encroachment. We're at 50%. I like to see it come back, give this a little kiss. Cam Model 1 entry here, if we can get back into that level. Right there, that's a Cam Model 1 entry. Oh, this would be a 1, 2, 3. There's 3 cam models you can make out of here, out of that whole run displacement, taking people in, thinking you're going to go long, taking it back against them. Cam Model 2, right there. Right back up inside this breaker again. We've traded below it, up inside it. I like to see that continue coming lower now. No, it's not HADI. It's not the one. It's this one here. Go back into Michael's videos and he'll explain why that is not the first one. Go into ICT index. I hope you're paying yourself at that level. Now I want to see this continue gunning right through this. You don't want to see it freezing up on there. So the body's right on there. I was just watching how the market's kind of working for the first half hour. Wait for the range to set itself up. So if Derek, if we do this, oops. Looky where we're going. Where's your area of interest, my friends? Two, 2.5 inside this area here. If we do get a retracement back into this range again, I want to see it, this breaker hold price again. Let's have a look at where this could end up if we went to 4 today, right back to this new day opening gap below us here. Yeah, I found that interesting that he told us about the first favorite cool to watch. Yep, that was mentioned to you guys a long time ago by one of our people. Mr. Abs was talking about this a long time ago. And it's a doozer. Study it. It's a key important level. I understand it as you explained it, day after the 931 closes. After 931, correct. Yeah, even a half day opening gap, crazy enhancements. So what you have to do is take this regular trading hour gap here and do this. You take your high to your low. Like that. Put it into quarters and send that out in time through the rest of the day. Day. All right, so here's Cam Model 3 coming our way. Right off the consequent encroachment. I don't want to see it get higher than that. If it goes above that in a close, then I'm not in the right spot. We've come back, we said we could come back into this order block looking for 50% of this run here. Came back and immediately rebalanced this candle. See that? Immediate rebalance. That should put us over the 50% mark. Now I'm looking for no more than that for CAM 3. You have a small fair value gap here. So you know how Michael was talking about that particular model, that entry model into 50% of the regular trading hours? That's where you see, now you combine that with what we have in terms of a reversal or fair value gap reversal. You trade below it right there, trade back inside it. Now you gun for that. That's your model for the day. You literally have from that candle's low 792 to here 728. That's 64 handles. That could be it for the day. You're done. And then you move to the sidelines, go golfing. Call up Derek, go for a golf route. Morning, Shepard. Just over 50% into the level right here. Just shy of it. Well, maybe it's right on it right here. I'm not sure. No, just shy of it there. We'll see if we dip into it. And then the next one I'm looking for is a right. What's the consequent encroachment of that in there? And my friends back in oil, did you appreciate my reversal I gave you right there? We said it was going to go lower, and look where she's at. And if you caught that oil trade this morning as I was giving it to you, you're smashing it. Smashing it. And look, Something interesting there, abs. Hey, look at that. Even in oil. Kaboom. Craig, did you just get like super rich or what? Did you take that trade? Did you take that trade? Now you're getting into this consolidated mess. Keep in mind this right here. Love it. I should get a thumbs up just from this one here alone. If you guys are on that one. If you like that little setup I just gave you there, hit the thumbs up if you like it. Let's look at gold. I'm just going to wait for this thing to kind of, you guys keep an eye on your charts too. Just looking at this right off this breaker. We've traced all the way back into this old high. I've got nothing in here in terms of hourly, 15-minute. We have one right here. We have an event horizon. And I want to see it take this low out here and use this as support. Like we just saw in NASDAQ, we want to see the same thing kind of happening here. I want to see use this for support to go lower. You're inside this consolidation now. If this drops through here, you've got consolidation 1, 2, and then this cam model 3 here to go lower. And you're looking to get back into this level here. Get below these lows into this area right here. Oh, look at that. That's holding, that breaker is holding price. We may get a nice deeper retracement into here. If we take this fair value gap on the downside, then we're looking to we'll see if we get support off this mean threshold, this candle, get a wick into that and pull back into the zone and see where she sits. This week will be interesting to see where soybeans goes. We could, if we just come back into the consequent encroachment of this and leave that last little piece open, I do not want to see it get below consequent encroachment. I do not want to see it get above that fair value gap right here. That needs to stay open for soybeans to stay bullish for me. If we start trading through it, it loses its luster for me for long immediately, and look for a deeper retracement into this range here of, that would be your optimum trade entry reversal at that mean threshold there. But like Michael says, don't pick the bottoms, because you get, you know, how he describes it if you try to pick your bottom. Wheat, we've now cleaned out these highs with the mean threshold of this candle. It's found its mean threshold here. It's support. Look for support off of here and start pushing higher. If we close below this today, then you're looking back inside this range again. And I like this candle at 50%. Got a nice wick up through sugar, and we didn't get anything more for that. Now we're getting a retracement. Still looking for this liquidity void below us here. It's my downside objective. How we act in here today is important. I like to see that just drop precipitously. Precipitously. This was beautiful. We called coffee on the beezer here last week. As it dropped below, we wanted to see it get below this candle. It did. it came back up inside it, and it cleared out our low here. Came back up inside nicely. It finally hit the objective we were looking for, and now we're back up into the premium objective again. Now we want to see how she acts inside that. All right, now let me go back to here because we're through that, so we're going higher. Line in the sand is this. We've traded above 50% CAM 3, so if it closes above that and comes back and gives you an opportunity to get out and wait, move to the sidelines. And that might be right there. Move to the sidelines, break even on your CAM 3 model and wait. Come back up inside this morning's fair value gap. Bodies are respecting it, dipping into that. Let's see if we can get a reaction off of here now. Two more minutes. And that'll be our range. They're taken here. We have a small one here. You start really mucking up your charts now. You want to see this candle's low get taken. We want to see this downside get taken. And inside this breaker, we take out that high. Trade back to the body there. It's 10 o'clock. Back inside this one here. See that reversal there to this one here? We got these two overlapping now. Let me just take this off of here. See that one right there? See how we've literally gone from here. We've traded above it. We've come back. We've hit this guy here. We have a body that trades above it. We've tapped it, pushed higher, filled the fair value gap. reverse, it's a deeper reverse inside this range. Came back, tapped it. We have not traded below it. We just re-engaged this one to go longer. You see that? So this to me is bullish right now. We held right on that 50%. Came back inside it. Did not trade below this. Mean threshold. Oil's just taking out its lows at 67. We see a reversal there off of oil and taking out 67.96. Watch that for a reversal. Man, that was a whole $1.10. That's a lot of money. In oil, if you're trading, you get $1 move in oil in one direction. You got a killer trade there. Now, if that doesn't hold, which it doesn't look like it is, it just came back into the consequent encroachment of that gap right there. You see that consequent encroachment, that fair value gap? It hit that. We're getting a further run down. So we did run for all this liquidity up here. You got it from right here all the way down to here. That's a massive run. This is oil right now, and this one here was just micro ES NASDAQ. Do you target a new low from this fair value gap? Or I don't use R ratio. I never use R ratios. The algorithm is not R ratio, so I don't use it. I know a lot of people do it, but I just gun for PD arrays, and I'll use a fib tool and PD arrays. And yes, you can gun for the lows after you've cleared out each PD array on the way down. We just want to try and stay in price. That's the whole point of this channel, is to say, how do you study price action and stay in it, not give you your perfect trade models. That's up to you guys to decide. But I look at the range that I'm in and I say, what PD array sits inside that range? What premium array, discount array would we technically be aiming for? And if you've worked them and you're looking to bust out of the range, then I'm looking for these lows and these highs once those ranges are worn out or utilized. So yeah, that it could be your downside objective, but you want to see confirmation that you're still reaching for that. As in oil, you know, once you took out that low here on a close that you did, if it trades back into it, that's a short, a continuation short. We gave you a reversal here. You have a reversal here as well. And inside this one here, you trade below it right there, and you trade back inside it right here. It's a short again. So you had a short here as entries, and this one here, which we didn't get. And then you're aiming for what's inside this range. Immediately you're gunning for these equal lows down here, and or fib, you're pulling your fib tool on the way down and taking some profits on the way down. If this liquidity looks really good for you, that's where your terminus would be, or your downside objective short term. Again, that whatever is your trading model. So for here, I don't see a reversal. So if you stayed in this and you said, I'm looking, when I get a reversal in the opposite direction, I will stay in this trade. Maybe that's your method for staying in. So there's nothing here, nothing here. We didn't trade through it here. All the way down, we took out lows, look for another reversal. You don't see anything here. Took out another low. This is the next reversal. Doesn't give it to you here. You take out this low. You're looking for this reversal. We didn't get it there, didn't get it there. So you're still in this trade all the way down, just using a simple method of when I get a next reversal, I'll get out of my trade that I'm short. See, it's another way of managing it. So, and none of that has to do with R ratios. Zero to do with R ratios. And that's not saying that R ratios are wrong. If that's your method, I fully support you. So this is a bit of a cluster here. Wait for something decent to set up here. Oil's on a big dive down right now. Gotta run back up now. We came back inside this one more time. Bodies are respecting it. I want to see this provide support here now and go higher. Fernando, good morning, my friend. I haven't seen you for a while now. Fernando. Chris, I'm hoping for a sweep of the highs and then an entry for lower. Agree. Has had time to clear up. It seems to want to go higher. That's what makes sense to me based on the 1 hour, 4 hour. Yeah, I'd like to see those highs get taken. I'm in a long off of here, so I've take some profit here and here, and I'm not and my stop loss is already pulled up to break even. So it's like a zero stress trade here, but I want to see if we can get some more juice out of this lemon and aim for higher objectives. I want to see this start to, so I want to see this stay open here now. Watch there. Important. See that little piece right there? See if that stays open. Nope. Right to the consequent encroachment. Up this old low here. What are we on? 1010. So this would be a silver bullet entry. Well, good thing you pay yourself at those highs. Not a silver bullet entry. Ran right through us. Take that out. Take the low out. Here's the reversal. Let me just give you all these because they're kind of overlapping now. This is where price action gets really kind of choppy. So we trade below this and see how one candle's taking out this breaker as well, because these down close candles, high, low, high. So we take it out with those candles. That makes that a breaker. You run through your breaker, 3 arrays in one candle, your ass is next. So we're looking to go lower now. So this is taking this out. You want to see it trade back into this and that candle there. Mean threshold of this wick is the bottom of that fair value gap inversion there. Let's see how we literally sat on it. Come back now and trade back into this guy right here, or consequent encroachment, or sorry, mean threshold of that cluster of candles there. Right into the mean threshold. And away we go. Well, if you're on an oil trade this morning, if you took this oil trade I gave you right here this morning, bring me to your retirement party. Get balls. Look at that. That is like $2.80 or $2.10. That's a killer trade this morning. You are welcome. And you still haven't got any sign of reversal here. So if you're just using that reversal pattern I just gave you, you have not even had so much as a reversal yet. So look at your downside objectives and say, what would I be aiming for next? 1, 2, 3. So you're looking here, you're looking here, you're looking here. A consequent encroachment, and you're looking there. So this is inside a larger model somewhere. What was that, like a weekly? Must be a weekly. That was a bunch of notes I made. If you're watching our channel in ThetaWave on Telegram, you'll see what that all means. We're looking for 65. Wasn't it 65? Come on. Yes, my friends, we're looking for all this down here. That's now been taken. Now I'm looking for these two equal lows to get taken, 50%. That's the range I'm looking for, that wick. I want to see that wick, 50% of the wick. This could be a beautiful run today. Holy crap, you guys could be hauling some serious ducats out of the market right now. Anyway, we finally cleared out this fair value gap. Regular trading hours gap is now concluded. We have a trade below order block, trade back into order blocks. The body's literally froze on 50% of that wick. Traded below it. So I like to see a body get below here though. There's the body below, came back, tapped it for the short. Too busy talking about oil, missed that entry right there. So you have here 50% of the wick and that old reversal here. That's why you pay yourself at the highs. So this little reversal I got here, pay yourself there, move to break even, came back. I got a little bit out there, came back, took me out. And then you get back in sequence or back in line with the market. Downside objective. Gotta go, D. Appointments. Thanks for everything. Don't forget to give Darren a thumbs up, you guys. Thanks, Abs. Take care, buddy. Cap Nemo, you got your 900 subs. Congrats. Oh, did I hit 900? I did. 901. Woohoo! Gotta love that. 901 subs. Thank you very much. All of you people for turning up. I was at 916 for the summer. Then all of a sudden it just suddenly dropped to 800 and something. So I wasn't doing some trading, and some people were quite, I guess, miffed by that and decided to just continue being my support team. That's okay. You're allowed to come and go as you please. Now we've swept the low. We're looking for this guy here. Does this give us support and start to run back higher now? So far, we're coming back into this breaker. Takes out this little high. A low, a high, a low, swing. We're back into that. Fair value gap. I don't want to see it trade above that. You just want to see this start continuing down for my downside objective. Looks like we're getting almost a reversal here on the 1 minute, HADI. So 15-second, you said? Yes, indeed. Yes, indeed. Yes, indeed. Now you want to see if this one holds, HADI. Nice little reversal here. Traded above it. You don't get a chance to get in on it here, so watch for this candle here. You trade back inside that, go long, inside this range, back to this order block. You've hit the mean threshold of it. Now whether or not this holds is what you're going to keep your eye on now. So if that was your long, And if it trades below that, you're out. Now I'm in that oil trade. I'm just moving into break even now. I got in that a little bit late, a lot late. It's like that downside objective looks like it's going to get hit. So watch, see if it trades through here now. We've taken out a whole ton of liquidity down there, and we've hit 50% of that wick. So I'm looking for a reversal in oil now. So just keep your eyes, if you're in that oil trade, look for a any opportunity to see that if that takes out any immediate fair value gap above you and displacement to the upside. If not, we can still run down deeper into that traded down in through here, back up through it here, support here. Where are we going? Slightly bullish here. Rejection block. Back up into these candles here. Let me get back on the 1 minute chart here. Back up into this breaker here. And move this over. Traded above that here now. See it come back into here and here. Talk about your premium array, discount array, equilibrium array. So we've come back up just over equilibrium. Taking out this high here. Now that we can use this to leverage to go higher back into all this. It's been worked like crazy in here. Or do we just gather up some just above into the premium level here to continue pushing lower for this objective down here? And now we'll see if we use this for leverage to go higher. Well caught there, HADI. Well done. You're inside that range. Pay yourself at the premium array. I've got a reversal going in oil right now. If you're watching that. But he's loving these 15-second reversals. I love it. Good for you, man. I hope you're killing it today, HADI. Stay in these 15-second ones. You caught the premium array, and now you're coming back to the discount array. So inside this range, you got this level right here. And then eventually, if we blow through these, looking for the deeper discount array here. It's a lot cleaner on a 15-second chart. So good for you, buddy. I'm happy for you. That's awesome. Yeah, I mentioned that already, Russell. Let's see us get some support off of here. You're welcome. Let's see what kind of support you get inside here now. You want to see that kick off of here? There's a small little imbalance down here. I want to see this whole price here now. We had the trade above. Let me show you this level here. So there's a small little imbalance here. You traded above it, came back into it, tap it, start running. Cleaned out this high here. Another fair value gap. That's the one you want to get some leverage off of. Yes, you can come back to that candle. And you want to see some leverage on top of here, get support and start climbing higher now. There's a small imbalance down here. I want to see that just keep climbing out of there. So if you were short on oil from way up here, from that reversal here, all the way down to this reversal here. So as soon as it starts to show you that we're going long again, that's where you get your trade will be out. So you're in here, you're out right there off that reversal. Does that make sense? So you haven't got anything that said that's a reversal here until there. And if it dives down now, you say, well, you know what, I'm happy with a $2 and almost a $3 run from there to here. That's that's an awesome day. It'd be like 300 handles or something like that. And now we've given you the reversal here, and we're looking for this to go higher now. It takes out those highs, pay yourself again. Always reach for the nearest high and then pull back from the range. There's no swing points anywhere in here except for up there. So when that one's done, that equal high, you pay yourself there, move yourself to break even, pay yourself there. And if that ends up taking out this high, where's that high? Right here. We get above that high and we find support off of these candles to go higher, then you're looking for the next range, 50% of the range. This fair value gap above you here, this one here. Stuck inside this one right now. Those two are interestingly overlapping, one to go long, one to go short. You're working inside there. Let's go into take out the lows, wait for a body to trade above this, trades above it. You don't get in here, but it comes all the way back down, taps you in here, goes all the way up into the premium array. So this would be where you were aiming for, from discount array to premium array. So you'd like to see an opportunity to get in there, whether or not, and we've had this discussion in the past about whether or not you guys are going to use this, whatever method, that's your trade method, whatever you want to use. If it closes on it, you may take it and go higher, and you may not. You may say, I want to see a body trade above it and then come back to it to find support, either at the consequent encroachment. Again, your entry is up to you guys, but I'm aiming for that premium array. So HADI had a really nice 15-second entry. Same kind of principle here. You see the reversal here. I'll even pull it all the way out here so you can see how many times we revisit it. There. So body trades above it. Now you want to see it trade back into it before you reach that premium array, which is way up here, right? And it comes back, gives you your entry. Now you reach your premium array. Then you see a reversal. So you say, great, if I see that reversal and I'm going to get short on that inside this range here. So you get short from there, trades back into it. So he's short, takes out these lows, pays himself. And now you're looking for where do I go from here? Because if you're pulling your fib tool inside that range, 52%, or sorry, 50, I don't know where I said 52%, 50%. From there to there, let me just use my proper fib tool. There's 62% retracement. So you got to 50, you take half your trade off, you got that low there, you pay yourself there, 62%, move to 50, take another portion off there, comes back, takes you out. Now you move to the sidelines and you wait because it's all sloppy. So HADI would have been a really nice trade, high, low. So from even on a 15-second chart, his entry, let's say it was at this extreme, 705, all the way up to here, that's 85 or 80 handles to there, reverse, and 80 handles, and then you catch this reversal right here at 86 down to this. There's another 30 handles, so there's 110 handles there just in a 15-second chart catching that run. So if he played that perfectly, that's what you would have got, just using that simple premium discount objective that we talked about before. And now you see how it's traded back up into that level again. That's the one you're looking for now. Let me get this guy out of here. Right there. You trade back up into it one more time. You got a reversal here, taking out these old highs if you're looking for that. Equal highs here. We just took those out back into a premium level. Watch for this to trade below here. It does. Trades back up inside it right there. You're short, taking out this low here. You pay yourself really quick. 63 handles down to this guy here. 33. There's 30 handles more in a 15-second chart. You paid yourself there. It came back up into that order block right here. So if you took out, we were looking for this one here. This is the typical rule we use. If we trade below it, trade back into it, get it. If you're not sure and you want to wait for that guy, fine. Trades below it right here, trades back up into it right there, tippy tappy, away you go, looking for this guy here. Inside the range, that's your discount array. So this guy here would be this guy here, inside that larger range. So that's where you're hitting right now. So you're literally working inside this 15-second chart here. So HADI, if you caught this, good for you, buddy. Good for you, man. That's well worked. And if you're smart in your entries and you say, well, I'm going to wait now till I'm in a premium level so I can get short, my stop loss will still sit here and I'll get to retest that one all over again, taking out this consolidation below me here. And you're in just this nice little premium discount range inside here, premium discount. And wait for the next reversal. If it doesn't reverse, if you just got in here and did the same thing we just did in oil, where you did that, you wait for the reversal to happen. You haven't got a reversal yet, so you stay in the chart to here, wait for another reversal, and keeping in mind on a higher time frame 1 minute chart, we're aiming for down here. That's the next discount array down here. This one here, I can delete that one. And oil's just giving you an indication that it wants to go lower now. You trade up above those little highs. The reversal, it is gap below you. Have an opportunity to get break even. Now you wait. Now you're in a, let's see what we're in here. Let me make this a little bigger. So we're looking for this to stay above here. It traded below it. You say, oh, I'm on the wrong side of this. Comes back, gives you an opportunity to get out of your trade. Are you disciplined enough to get out of your trade there? It's showing you that I want to go lower, give you an opportunity to get out. It went lower. Remember that little imbalance we talked about down here? It came back to it right there. Now I want to see it climb above these levels here and use this and this as support to go higher. So I was telling you about this one, so keep that in mind. I hope you kept it in mind. Now you want to see these lose to the upside. See how we traded above it again? Literally gap open on it, and now it's starting to run higher. If it takes the high out, which it did right there, pay yourself. If you're looking for these equal highs, you got rejection block. You'll hear me say so many times in the past, go through my other videos, you'll hear me say, pay yourself at rejection blocks, pay yourself at rejection blocks. Because if this just becomes a nice flat top right here, and they want to build up some more liquidity there, and they drive that back down again, you would have lost some liquidity at the, or you lost some money at the rejection block. And the distance between here and here is minimal, but the chances of you taking out those highs all the time are not always 100%. Now, if it does, we want to see a big bold candle get up there. Literally even highs now. Tap it and go. Tap it and go. Leave that open and go. We have another little imbalance down here. Get out of Dodge. Let's go. Look at that. Tap it and go. Pay yourself there. Come back, find some support at this. I like it. I like it. Keep on moving. There you go. Find some support there. Got a little imbalance right here. Keep on trucking. Let's go back to our regularly scheduled program. 15-second chart. There's nothing in here. See that little discount array? We hit the array, started ripping off of it. Now you want to see it cut right back through here and use this. There you go. And I want downside objective. Come on in. Bottom of that weekly fair value gap. Pay yourself there. And see how we act here on the 1 minute chart. HADI, are you cleaning house today? See how we reacted? We're off the bottom of the regular trading hours. So you take that and you project it out into the future. See how the body, see how the candles are respecting that? They come down, they work it, tap it. Pay yourself below old lows. Pay yourself at the bottom of a weekly fair value gap. You've now taken out this low, so this creates that fair value gap there, and we trade above it and use this candle for support. Look for a higher range back into this range again. Oil, we've got this little one right here. There to there. We've got this low taken here. Trade above it. Pay yourself here. come back into the range, into this range, back into here. I want to see that provide support. You've got this little imbalance right here. Keep your eye on that little imbalance right there as well. I don't want to see that get taken for sure. I want to see, you can see up to here, wick into that. And then see if you get a response off of this. See how this high is taken? There's a fair value gap below you here or above you here. Traded below it. You didn't quite get back into it for the reversal. Back into this range. So we're between here and here now. Premium. This is not quite discount. I don't think that's discount. Or if it is, it's like right on the 50% range. Yes, it is. It's discount. Premium array, discount array with back discount, and you want to run back up and through here. You want to get through this right here. These two are overlapping right now. I want to see them taken to the upside and keep pushing higher. Look at that, right back in there, schmuck. Close above that. And keep on trucking. Watch this here now. HADI's already probably seen a reversal here on the 15-second chart. Let's see if there's one down here. And there is. Look at that. You hit the bottom of the weekly. It's an objective you're looking for a reversal on. There it is right there. And you tap into it here. You're back inside this range. And even if you caught this small little run here, HADI's laughing. He's giggling to himself, just making coin today. There's 697 to the premium. There's 100, or there's another 20. We're about to hit 30 handles right here. Almost 30 handles. In a 15-second chart, back up inside here, pay yourself. Pull your fib tool from here to here. Enter in here, 50, 62%, whatever. Small little sniper ranges. On a 1-minute chart, you've traded above here. Watch this. If we retrace back into here and then start going higher, look for these relative equal highs above you here. And your next upside objective would be somewhere in this level. Watch here. Bitcoin too. There's the reverse in Bitcoin, looking for this objective up here. Well, this is a daily chart, so we're expecting a lot. It's not going to happen in a day. We hit the consequent encroachment there. Gold gave you your reverse through this one. You tap that right there on gold. You don't get this one. It trades through this one. You take that one for the short, aiming for here and here. You get your low taken out, your discount array inside that large range, all the way down to here. Would hit it perfectly, traded through it. then back through at the other side. Now you're back up inside this range. Gold was a nice, if you're watching for perfection for a trade right there, you're in the lower half of this, so you may not have taken that, but that's the reverse there if you don't catch that one. Now you're looking for this to get utilized up here, I think. And we'll see if we get that to fill. And then push higher into this weekly objective. See how the consequent encroachment of this order block here. Let's see how the bodies of the candles respect that. Beautiful. It's a breaker. It's the last down candle before taking out these old highs on this run up here. So you have a high, swing low, swing high, swing low again, and then finally take that out. It's the last down close candle. Runs up, takes those out. Comes back into 50% of the range, also inside that fair value gap, looking for an extension. Then we trade back through, take out these trailing low stops for anybody who's going long, all the way back into mean threshold of the breaker. Find support, continue pushing higher. That's a reversal right there. You don't get a chance to get in on it. Maybe on a 1 minute or HADI's 30-second chart. See a 30-second chart. If HADI was trading gold today, HADI says, what are you talking about? It's like staring you right in the face, man. Right there. There's one there. Ba-boom. HADI's bathing himself in gold, frankincense, and myrrh. Right there. Trade above it. Or this order block breaker right here. I like this one too. So if we mark that as a breaker, these things, you kind of mark these as you go. And you say, Monsieur Breaker. Right there. Takes this, breaks them to the downside. You trade above. You break them to the upside. Sorry, right here. You break to the upside, come back, find support at them, push for equal highs or mean threshold, however you want to trade your model. There is a reversal right in here. See that little guy right there? You trade below it, you trade back up inside it, ding, run all the way back down into the breaker again, which is what you're looking for it to go long. You have another, you take out these lows here. If you're not sure, you're still hemming and hawing whether or not this stuff actually works. Then you wait for it to trade above, comes back inside again to go long. So you got lots of opportunities here to catch your inversion fair value gap reversals and breakers, trade-off breakers if you want. Looking for a premium array inside that 30-second range. I'd be looking for somewhere around in here. That'd be an upside objective for me. We'll see if we get that. And don't go chasing this either. Just study price action and see what you get. We're back through this again. See, we trade bodies. We're respecting that. That one just gapped up, went below it. We're still below the stop loss there. If you're short off that, inside that range, we've traded below this here now. Does this mean threshold hold price? And are we just slowly grinding our way up? You got this one here. That holds price. This one holds price to go lower. This one you wanted to see it trade above it to go higher. Mean threshold. There's that imbalance one more time. And the fill of that imbalance is 66, big figure. So when it goes into these consolidations, you have to stay on this, because when we were calling this to go long, you got to stay on watching these, because when you get the reversal, it tells you, nope, I'm not done pissing around with people down here yet. I'm not done taking out people who are trying to catch this on a reversal. So you got to be prepared to pay yourself at these recent highs. If you don't, and you're not paying yourself at rejection blocks, then here's an example of why rejection blocks, you pay yourself because you did not take out that high. So if you're catching this to go long, you pay yourself at rejection block, not the high, and you'll see why. Now all that, now you're underwater. Let's get back over here. 30-second chart, 15-second chart again. Pay yourself at rejection block. You got the high this time. We just shorted this. We're going to hit this damn objective sometime today. See how long it's taking to get down here? Support, support, support. You want this to continue going higher into here. And we've got this inside this range here. That's my premium array. I've got nothing really swinging here other than this. Yeah, this is just choppy here. Even in a 15-second chart, this is getting a little sloppy now. Don't give up all your profits today, HADI. Now, if you're aiming for this objective and it gets taken out and you haven't got in off of this reversal here for that short little quick run to here or inside this range here, you have another opportunity. I want that wick to hold price up, equal highs. Buy side, yeah, so far so good. Good for you, HADI. Remember, this is getting really choppy now, so be careful about how much luck you push here, because the algorithm is getting really sloppy right now. Like it's really tight and bouncing around, so you can get beat up in this kind of environment. Look from here to here, you're already over 50%. So if that reverses and drives through this with a sense of certainty, look for 50% of that wick. If we lose 50% of the wick, look for this objective down here still. If we get below this, look for this to extend the range down into here. If we continue to find support at this, look for the premium array above you. If we can get through that, look for a further run up for these equal highs here and this opening gap. Good for you, Hadi. That's a smart guy. That's somebody who's smart enough to say, look, I've had enough. I've done well today. If you still feel that anxiety coming in or that excitement of like, I did really, really well today, you got to wonder, is the gambling mindset starting to come in here now? Am I like feeling like I've got lady luck on my side. I'm rolling sevens all day. If you're starting to change your mindset into that, like I want more, is that what's driving you, or logic and reason? And right now the charts are going really tight and not smooth. So wait for the time of day. Like we're getting into 11 o'clock now. So you want to move to the sidelines and take your lion's share of the day. Smart move, man. That is a professional investor. When you start to think about what's going on inside your head and how you're responding to this, that's journal time. Journal what you're feeling right now. Put that in your chart, put it in your journal, and review days when you were really doing well and mark it as day I was doing well. What was I thinking? What started to affect me? Did my mind change over from look how much money I've made, or this is how I'm going to get into my trade, to look how much money I make. Who can I make more? Because that's not the mindset you want to be entering in on. That's not how you made your money today. You made it based on sound logic. So all the time you get that, enjoy it, my friend. Enjoy it. Again, upside objective is here. I'll be right back. Gotta go to the bathroom. Coffee's going right through me. Can you hear me now? Can you? Yeah. Sorry, I hit my pause button. So we hit that objective. Good. Next objective is this guy here. Mean threshold. Open of the daily fair value gap. Good. We're just bouncing off of that now. Watch this guy here. Now we have a body traded above. This is a candle here. You think about how sloppy this price action is, and yet you can still stay on it. With everything we've talked about here, you can still stay on or in price action. I'm not saying you should be in a trade, but the objective is to stay in price action. Look for specific key levels that support price, objectives to aim for, and whatever your model is that helps you. Hopefully this helps you find support inside your model, make your model a little more stronger when you understand price action cleaner, candle by candle, where you want to see it hold, at what point you want to see. If it fails at that point, then you say, okay, at that candle, at that spot is what I'm expecting to see it fail at. If it's algorithmic, it should be doing just what we're calling here, right? So we've come back into this order block here. Its candles open, and now you want to see it continue going higher. We have an immediate rebalance. So we're keyed off of that daily fair value gap again. See that right there? Just coming back into the order block, pushing through higher. Now, if that's not algorithmic, I don't know what it is. Right? That's the next upside objective. Again, if you take out a high, pay yourself. You're in a side or a lot of chop this morning, so keep your stop loss in a reasonable level that supports an idea that you're going to go either higher inside this range, and now you want to use this to leverage going higher. This is the rock face, and you're looking for little cracks in the crevice in the rock to get yourself some support on to go higher. Support on, leverage, get on top of this, and just slowly climb the rock face. And where does it slip? Where does it fall? Where do you fail? That's the important thing you got to kind of look for. And watch price action. And sorry, I'm not giving you the exact words and terminology as nicely and smoothly as Michael gives it to you, but the principles are still the same. We're looking for key levels, and you can see whether or not they're supporting price or not. And I'm trying to call it right to like precision levels, so you can where you're expecting price to go to and where you expect it to fail. So I like this order block here. So we just got an order block back to here, Do we have the mean threshold, or do we give that away? Because now we've got this small little fair value gaps forming right here. We've taken out that high. We've got relative equal highs right here. So again, upside objective. So I want to see that still maintain support off this candle here. I want to see that become our support mechanism right there and start going higher. Line in the sand is the consequent encroachment of that, which is also this candle's fair value gap. See how we're trading just closing below it right now? So now you start to go into, okay, we're coming back into this range here. We just came back to this candle's open. Trade back through it. Good. Get up on top of that now. If it doesn't, you see how it's trading below it already? We want to see this mean threshold hold price and in a wick and go back up. We don't want to see the body close below that, which it has already. So now I'm thinking go lower now that we've taken this high out. There's the mean threshold. That was the little, hey, look, I'm going lower. Snap. You want to see that hold. If it doesn't, then we're going back into the range, like I said. There's the mean, you'll watch the mean threshold. See how that just literally froze on it and then open, and then we keep going down. So now you've got a reversal. You want to see this candle get taken on the downside, finding some support at this, come back into this range now. So now I go from this array, which was the premium of that range, which we're still inside, and I'm looking for this guy here. Mean thresholds holding, wicks do the damage, come up through, get through the mean threshold, this candle, find support here and go higher. So I literally held on that, the bodies. I was thinking, oh, we're going to go lower now. Body froze right on the mean threshold. I was a little zealous, overzealous on my retracement lower. It did go lower, but to the mean threshold, that's what we're looking for. Held it. Wick down, closed on it, opened just above it. Now we've cleaned this high out. We've come back, we've tapped it. You want to see this go higher now. Again, back to this objective. So if you're on the wrong side of price action, this is where I was kind of speaking too quickly. We did call that mean threshold. We want to see that hold there. Wick came down, wick through it. You're above it. We're back into this. So this area is obviously getting worked now. This fair value gap is getting worked a bit more before either going higher or keying off of it. And now we need to take out that candle's low to go lower inside this range. And this one's been worked quite a lot already. So I'd like to see it keep going higher. We have this one and this one overlapping. Keep coming. So we have relatively equal highs above us. Premium array. That's the highs taken. And oil's just waffling around there. I think oil wants to take a run on those weekly lows. I think that's going to be the downside objective this week, is those equal lows. and bing, you hit it. So that's our upside objective. Took a lot to get there from this discount, this reversal here. It took us a lot to get all the way back up here, a lot of chop. Not clean at all. That's a 1 minute chart. Now, all the reversals on the 15-second chart, HADI was calling this back here. Nice reversal. And look at that, right on a 1050 macro. 1050 right there, 1051. The macro begins. And we run to our premium array up here. Where's our 10, 11, 10? There's your 11, 10. Takes out these old highs here. Reverse back into this range. Premium discount. Look at it. From there, reverse. You don't get an opportunity to get in on it. Right there, just shy of it. Runs right to the discount array. Another little reversal. You get an opportunity to get in on it there. Continuation on the upside. You retrace back to the order block here. Continue pushing higher. Bodies respect this one. You don't get a chance to trade below it. You're inside this one and finally reach your high. That's 15 seconds. Even that's pretty choppy, hey? Anyway, yeah, so we hit our upside objective. Hit the target. What is the first thing you do when you open up a fresh chart? Do you perhaps have a video explaining it? No, I don't have a video explaining it. I go with the daily. I'll start with the daily, find out where we are. I use the principles that we're doing on a 15-second chart. I do on a daily. I look for fair value gaps. I look to say, where are we inside a daily fair value gap? Because if you go to the daily chart and start getting your perspective, right? So, for example, here's your swing, for example. Here's your reversal right here. See how you trade below it right there? It closes below it, comes back up inside it. The bodies are inside, just above it here. We have another imbalance traded below it. So if you miss that opportunity there and this day closes, we want to look for this candle to get taken on the downside. It does. We trade back up inside this candle, like this was a 15-second chart. It trades back up inside it. You look for a reversal. So I'd be saying today, if I can catch a reversal back into this candle today, for the following day, I'd look for a reversal. So inside this candle's wick for that day, I'd be looking for a reversal to run these lows out. And you would have had a beautiful, so you would have had a little bit of a day there. And if you're really doing a continuation on taking these lows, that's your bias. That's how you get your bias based on 15-second chart. Same kind of thing here. You see this reversal, and you go, oh, as soon as we trade back into here, I'm looking for an opportunity to go long. So you may not have seen it right here. You have to wait till morning. There's a little imbalance down here. Then you'll suddenly, if you go back into the charts on Thursday, and that would be my advice to you, to go back into your charts, look for a reversal on Thursday, the 25th of April, and look for a reversal at that point of the low of the day. See what time it lines up with in that imbalance, and you would be looking for a long that day because you've got your reverse back into this range here. So until you see that reversal and you think, I'm going to go long on that, that's what you're looking for. So key times, and then if you don't see it here, you don't see it, you don't see it, all of a sudden you see it here, you think, great, now if we can get above this level right here, I'm into that. So it trades above, keeps on climbing higher, then you're like, on that for a long run back up in this range here, or at least this order block, because you want to see it get above this order block next on the daily to go higher. So it closed above it right here, and you opened on it right there the next day. And then you say, I'm looking for a reversal. So on May 5th, May 6th, you're looking for a reversal to come back and just off this candle here, any reversal. So you look at that time and you look at this and you say, that's a new week opening gap. I want to get in on that as well. If I can come back there, find confluences that support that going higher, you would have caught that run there just on that whole day. And that's a quite sizable amount of candles for you for the day. So anyway, that's what I look for on when I start up the day. Where am I inside the charts? What am I expecting? What levels do I think would provide a level of support that I can get a reversal off of? And you go down to the hourly chart. So for example, this one we saw right here. So you see it coming back into here and a fill of that fair value gap there. So you're looking for, this low has been hit already. So you look for right there. So today you're looking for a reversal on the 1 hour chart that supports going lower. So today, open up your chart. We have this high taken. We don't have a support yet to go lower. All we've got is a continuation on the upside. Look for, you heard me saying this morning, I'm looking for this fair value gap on the weekly, or this consequent encroachment on the weekly, this consequent encroachment on the daily fair value gap, and this order block here. Its mean threshold, they tend to line up. There's confluences that support this. Here you see how they're all overlapping now, higher time frame premise. So you're looking for any opportunity in here now, especially off of this point here. For price to hit this, hit here, and then you go, I want to catch a low. So far you don't have a confluence on an hourly for the daily and weekly that we're looking for that little swing point to happen. And if we don't get it on the hourly, then you wait. And we're just trying to snatch, like HADI is grabbing 15-second runs out of here on an hourly chart. He might be using an upside objective and say, well, that's my upside objective, or 50% of this wick is my upside objective. If I can get in on a 15-second chart into a retracement back into this old high here, if I get a reversal and that old high looks like it's going to give me support, when we come back into it on an hourly, I'm looking for a reversal. Looking for a reversal. Here's that little fair value gap right here. If I can get back in, and right on a weekly, you might be saying, I'm looking for my reversal right here off this fair value gap here and this order block breaker. These two candles together, we have a low, a high, a low, and taking out these highs. So you look at this and say, if we can get back into that breaker, I'm looking for an extension, whatever your model is, right? You're looking for that early 15-second chart. HADI might be saying, this is where I'm looking for my snipe for the day. And if I can catch that hour on the way up and it continues to go higher, I put my stop loss really relatively tight, and I'm aiming for these previous hour's high, like you would be on a daily candle or 4-hour candle or whatever. He's got 50% of his wick. He's looking for perhaps there as a level of saying, well, if I can get through 50% of that wick, I know those equal highs, and that mean threshold is my objective inside that larger range that we're in right now. And it's obviously very bullish. There's nothing above me other than this breaker that takes out this low right here, slams down. So that mean threshold of that last up close candle, which is the most sensitive, that has all these confluences above it. I want to find support. We've already probed there once, couldn't get up into that daily fair value gap, consequent encroachment. One more time, that would be 50% of the wick, which is right here. You say that might be an objective I'm aiming for, or I look for a reversal here. saying, can I get back down into 50% of this wick? Can I get below this reversal now? Do I get my confluence or my confirmation that this is going to go lower? I look for this. So you set that out in your chart as a 1 hour, and you just either continue trading higher, looking for the reversal, wait for your reversal, or if you're in this, you wait for proof to say, hey, look, you're on the wrong side of this now. In an hour, you'd use a minute chart or a 5-minute chart for that. So go down to your 15-minute chart. Where's your first order of business is right here on the 15-minute chart. We take out that low. You look for an opportunity to get in on that. And you might have to wait quite a few. It's taken out this high already, right? So then you say, I've got one right here. I traded below it. So premium and discount arrays. So if this was the premium right here, because now the high has been taken, right? That would be, that's what you're aiming for. That high has been taken now. So you see this reversal. It trades through it and then comes back. Look at that. Right inside it. Let me move this out of here, over here a bit more. See it? Right there. Nails it. And then we could come all the way back inside here, pull your fib tool on that, and you're looking for the discount array. It does. It comes back in. Or you're looking for, I need to go long now. I've already taken that high out, so you can be careful that we're not going to continue to extend lower. So you want to find support off of that. Here, you don't get an opportunity to get back in it, but we do have that imbalance on the daily. My blue boxes are my dailies, or this would be the 9:30 open from the previous day. We get back inside that, find support. Now you're gunning for these highs and you just clean them out there. Oops, let me just take this guy here. And this is 15-minute charts here, right? You closed above it, literally kept going, take out that high. Here's your reversal on a 15-minute chart. You trade below it, right up to it, and then finally drop down below it. So that's working that down, up. So it says I'm going down, it says I'm going up. Nope, it says I'm going down. So you could have got beat up in there a few times, but if you said, oh, it's going to go down, if it comes back up into the perfect level right there and trades above it, then I'm wrong. Gives you an opportunity to break even if you use the fail-safe I taught you in one of my videos. And then you wait. Once you get taken on that one side, and then you get beat up on the other side, wait for a high or a low to get taken, or a new distinctive fair value gap to form. So you had an opportunity to break even there, came back into optimum trade entry, reversed back up into an old low, and then finally worked all the way down into discount, traded back up. Now you're inside this range, right back up into premium level again. You don't get this level here. I don't know why I always wrestle with that thing. Just make it bigger. Discount array, premium array. Comes back in the consequent encroachment of that discount array one more time. There's the reversal. Take this low out. So this guy here now becomes this guy here. Right there, body trades above it. Trade back into that hourly fair value gap again. The opening of the day goes higher through the premium array. So now it's saying I'm going to extend the range higher. So it extends it, takes out this highs, and we get back into this mess that we're in right now. Not very clean, right? But that's a 15-minute chart. 5-minute chart, same kind of thing. There's the reversal there. Body trades through it. You come back right on it right there. Perfectly on it. Tap it right there. Go higher. Looking for that old high there. rejection block, pay yourself a rejection block right there. You trade back into this small range here. Inside that, it's around for a while before taking out the high. Aiming for the premium array on the higher time frame. You see this, it rinses and repeats over and over and over again. And you can see how that's, if you have a theory that you're using, it must be a fractal thing and it must be able to prove it on all time frames. And if you get down into a 15-second chart, HADI, you see HADI use it this morning with awesome precision. See how that premium array that we were aiming for inside the larger range, it hit it, and you don't get the equal highs that you were hoping for because the range was not extended inside that hourly beginning of the day's fair value gap. Look at that consequent encroachment. Schmuck. Hits it nicely. We break through that. I don't know which one was this one. It's a different time frame. Too many overlapping ones now. Sorry, let me remove that one. There's a small little guy right here. We trade below, come back up inside, right there on it. Trade lower. We're looking for this guy down here now. Premium. Discount inside that larger range here now. This is the discount one. I want to see this one get hit now. Equal lows below you. And we'll see how we respond off the consequent encroachment of this inversion. I hope that makes sense to you. And oil continues to push lower. Let's look at oil. Look at the drama mama this did. So let's talk through this so you can stay, you've got to really stay on price action and study it right now. There. We traded through it, and then we traded through it the other side. You think, oh, are we going longer or shorter? I got beat up on one side, then it traded through it again. You say, no, I'm waiting now. You get beat up on it once, twice, forget it. Wait for something significant. Wait for this low to get taken, to go lower, or you want to see that order block there get taken on the upside and use some support off of it to go higher. It didn't take that high on a close. It came right up to the top of it. You get another reversal above this old high here. So you think, inside this range, I've got a discount array. And I've got a premium array. We traded right back up inside that. Popped up. Ran through that. Extend the range. So you extend the range, take out the low. Imbalance. Traded above it. Come back inside. Push higher. Imbalance. Rejection block. You don't get the highs. Reversal. Trades below it right there. Trades back into it. Tippy tappy. And gets below the one that we wanted it to extend higher. So it comes back, trades back inside it one more time. Takes out the low. Comes back inside the range. I don't know if that's 50% or not. Let's have a look. Just shy of 50% of that range. We come back into this candle's wick, 50% of the wick. Watch this. And you can see the wick there. That was the I take that candle's wick right there. You don't even get 50% of it. Short, you want to see that. That would be what you want to get either a play off of this, or you don't want to see it break through 50% of the wick. It didn't even reach 50% of that wick inside that fair value gap there. There's the one you trade below. Come back up inside this guy here. We traded below it. We get through the next one, trade back up inside it. Wick goes a little high. We came back inside it here, inside that wick. Support, go lower. I've got nothing that really continues to give me See how we take this one out here. You look for this imbalance, trade it above it, you come back inside it. There's a little imbalance down here. There's so many little things you can bounce around off in here. You get thrown off and you go, oh. When it finally takes out a low and resets, I want to get back on the horse here. Takes the low, fair value gap. You say if it trades above that, it does right there. And then it trades back through it. You go, I'm on the wrong side of this. Back into the order block. Your stop would have been taken. And then we continue going lower. You'd want to see that hold price. The fact that it traded through there right now could have thrown me off. That would have thrown me off. Trade back inside it. And you want to see it go higher. And if it starts collapsing through the mean threshold of that, you go, I'm on the wrong side of this now. It should not have come back and revisited this. Once it's tapped it, it should start going. If it doesn't, it starts eating through this mean threshold of this candle. You go, no, I'm on the wrong side of that. Takes your low, takes that low. You go, okay, now it's taking the low. If we can trade back into this low, you can get short. Get back in sync with the market. Literally comes back to it, taps it, and down you go. And we're at the next level of that larger 25, 75 of the wick. Remember that big wick we're talking about on the weekly? This is it right here. So there's that 70 or 25%, 50%, 75%, and the low, which is down here. So we're just hitting 50% of that wick there now. How's that for choppiness? Beat you up inside there. Hello, Dave Barry. Then off to meetings. Have a great one, buddy. Oil continues its false move before the storm. Good morning, Justin. I got 12 more minutes and then I'm out of here. Consolidation. Little cam model going on there. See if you get a retrace back to here or 50% and go lower. For this to go higher, you need to take out this high here and that order block there. That'd be a cam 1, cam 2. There is no cam 3, so that'll be cam 2. So if you close above that on a close, then you're looking for these relative equal highs above you. We're looking for a retracement back into here. We found support off this candle here. Push higher today. Take out that high. Now I want to see this candle here provide a level of support. And I want to see that reacting off of there now. We're through this volume imbalance to the other side. You want to see this turn into a wick now and start pushing higher. Finally got those lows taken. Looking for the discount array over here. See how it works through that. Taken. We're expecting it to come back into that range. So there's your reversal. You trade back inside it here. See how the bodies are respecting it nicely here. Continuation. So you're expecting it to get down into here now. Pay yourself here. Again, most recent low or swing point. You want to pay yourself there, here, fair value gap, high, consequent encroachment, and low, order block. And then once we get back into here, you're looking for a reversal to occur to catch the next run back up into this fair value gap here. Downside objective is hit. Finally. Now we'll see how we react off of this. Now they've taken that low. Premium array. Finally aimed for our, see how we went through this discount array right here? Extend the range, take out the low. 50% of the wick, you want to see that give way. It does. Hits my discount array we've been looking for all freaking day now. It's just taking us all this time to work these premium and discount arrays inside this range before finally hitting that right before lunch. Taking out the low created at 1051. Isn't that crazy? Working this whole freaking thing all day long inside that range. Premium array right across, right out of that 930 open. Thank you for the explanation. Just a bit overwhelming learning all this stuff. Yeah, you know, you're not going to learn it in 6 months. Like Michael says, there's so much stuff for his to learn. Right here, I'm just showing you my model is our inversion fair value gap reversals and taking out old highs. That's my model. Doesn't have to be your model. It's and it's just a study in price action, really. Just stick with it there, Debt Wolf. Plenty of time, man. The markets aren't going to change. Like Michael says, they're not going to change the algorithm around. This stuff happens every single day, almost hourly. You can see when markets are in these kind of crappy environments that you don't want to mess around with them. But if you study it and you can be really nimble, like as in the 15-second chart, like HADI was this morning, he caught some really nice simple setups. And you could have hauled a couple of hundred pips out of that or handles out of that just trading a 15-second chart if you were disciplined enough to stick with it. And like you know, this reversal here, for example, the premium array, reverse, discount array, like that by itself is 120, 720. There's 60. If you go to the consequent encroachment, there's 65 handles. And then from there, all the way down into this one is another, that's 120 handles. Just in there. There's 180 handles in a simple run to a premium array, wait for a reversal to the discount array. Now, it's all easy to say now, but we're bouncing around from this one, looking for a run up into a premium, hit the premium array, looking for a reversal, catch a reversal to the discount array, which is right here, inside that smaller range. We went through it, right there, extended the range, wait for the reversal, got the reversal, and caught that one. So even from here to here, that's a logic. That would have been another 30, 50 handles, whatever. Reversal, take this out, or at least come back into here. That's from there, 62. Yeah, there's another almost 50 handles just to there. So there's hundreds of handles just inside this range here. If you know what you're looking for and you're disciplined enough to wait and weather all this chop, you had nothing in here that would support that we would have. Yeah, I guess you would right there. So you can get thrown off. Order block back to consolidation. Yeah. I can see these little points where you start to make them and they start to change you up and throw you off the horse, then put you back on the horse, get you back in line with it to continue running higher. There's a couple of points in here that you could have got pitched off the horse, as long as you're recognizing that you get back on it again to go higher. Or you could just get beat up in there. Or you just say, nope, that's my objective. I'm aiming for that. Stop loss goes here and we'll let it run and see what happens. That's discipline in there and trading your model, obviously. Now we've traded through below this, tap it. You're looking for an extension now. On that 1 minute chart again, we're looking for these lows to get taken, and they did right there. We have a weekly fair value gap here, and we have a daily fair value gap imbalance or something here. I don't know if that's an imbalance, but we're digging into that daily now. New day opening gap below you. Could be the high of the week. Tuesday's high of the week. A Lakers fan? No, I'm not a Lakers fan. I don't watch football. I know Lakers is not a football team. It's a joke, you know. No, I don't follow Lakers. I don't follow basketball at all. The Pittsburgh Lakers, no idea. I'm from Canada. We don't watch American sports very often. There's some up here a bit crazy for them, but I was into martial arts. I like UFC stuff. Okay, that's my discount array done and dusted finally. Where's your next one? Look at this large range here now. Where's my next one? That's my next one. HADI says, check out the 15-second chart again. There, see that? Traded above, come back inside, push higher. Look at this range, look at that order block there. Get through that 50% of that range there. Sorry, I got my alarms going off here for time of day. Now see how we've traded above it, come back inside it. You want to see that whole price now? If it, you got to be remember just inside this range here, HADI stop loss is tight. If this guns through you, it should not yet. Now get out of it because that's traded below, and wait, move to the sidelines and wait for a cleaner setup. See how it traded below? Give you an opportunity to get out. We're going lower. Just came back into this fair value gap here. See, HADI, you got a chance to get out of it real quick. Say, oh, I like the idea. Oh no, it's changing on me. As soon as it traded below that, gave you an opportunity to get out. I hope you got out. And slammo. So even though he thought that this was a good reversal, and he was like, okay, I'm going to go long on that. He went long, and he's looking for, if he was looking for 50% of that range, and all of a sudden it traded back, and he went, no, HADI, get out. Came back, give him an opportunity to get out of his trade before slamming down and taking out his stop loss. That's the fail-safe. That's how the fail-safe works. So if you're on the wrong side of the market, you might get one opportunity to get your ass off of there before it comes and spanks you. There you go. Anyway, there's the downside next downside objective that was hit. Consequent encroachment seems to be holding price for the time being. I hope you enjoy that. I'm out of here now. Thank you very much for tuning in, and I will see you guys tomorrow. Yeah, it was fun. Thank you very much for 901 subscribers. That's awesome. We're finally back over 900 again, and I'm only here for another week, and then I'm going to go on vacation. Hopefully I get you guys, bring you guys with me. I'll do a little trading over there in Thailand as well. So let's hope there's some internet over there. They have internet in Thailand? I hope so. It's not like a third world country. I've never been there, so I have no idea. Anyway, thank you so much. I'm going to write thank yous in here. Thanks to all of you. And I'm sending you love, man. Sending lots of love. There goes the hearts. I love you guys. Anyway, I'll see you guys tomorrow. Hope you had a great day. HADI, you rocked it, man. Let's check out the title of my video today. It's Rocking It with HADI. That's going to be the title of the chart today. So HADI, you're the man of the hour. That's what my title of my video will be today. Rocking It with HADI. Anyway, I'll see you guys tomorrow. Thanks for tuning in, and have a great, great day.